What do you know?
What do you know?
It's Monday.
Yes, it is. It's Monday, everybody. TGIM. Thank God it's Monday.
TGIM.
Welcome to episode 3, Giving Up Game.
Game.
With Inside Access.
With Inside.
Today, we have special guests in the house. Going to talk about personal credit repair. Miss Nicole Scott, Bay Area Credit Repair. She's going to drop y'all some jewels.
Absolutely.
We're going to bust down everything from train wrecks to good credit, how to leverage it.
Talk about why credit repair is important, who needs it. Definitely if your score starts with a 4, 5, or 6, you need to be on this call.
4, 5, or 6. You need to see somebody.
Need to see somebody. All right, y'all know the rules. Cash App is at the top. If we drop you a jewel and they help you that next stage, your life, change your business. Bang the Cash App is very much appreciated. Nothing's too big, nothing's too small.
All right, folks. Sorry, y'all. What happened?
Turn the audio.
It came off my Bluetooth, that's why.
Get it together over there, bro. Get it together.
Hey, man. There we go.
All right, we back in the game, y'all. All right, so bang you down, personal credit. And why it's important. Just can't do nothing like without good credit. Point blank and simple. You have so like what would be considered good credit in 2021? 580, 600, 640, over 700. What that would look like? What that look like?
Well, we all know anything with a 4, 5, or 6 nowadays isn't the best score. Credit is one of them untalked about topics that a lot of us growing up wasn't privy to. Parents didn't really talk about credit. Grandparents really didn't talk about credit. Till you got older and you started getting free offers and just applying for stuff, not understanding the impact that bad credit can have, dictating where you live, what you drive, what type of job you get, insurance rates. All these things can be tied to having good credit. So, growing up, it just wasn't a thing you talked about. So we definitely want to dive into it and let you guys know how it's a tool, especially in 2020, how you want to definitely structure it, what data points are, and other credit bureaus that house our data that most people don't even know about. So we will get, is she on yet?
Yep, she's here.
I don't see her.
Yep, she's here.
I
don't see her.
Oh. Well,
so with no further ado, we're going to bring in a specialist. Like I said, her name is Nicole Scott. Bay Area Credit Repair. And she's going to run down and we're going to dive into strategies, what credit is, how you can use it, how you can leverage it. We're going to let her do her thing.
Am I live? Am I live? Can y'all hear me?
Yes, we can.
Yes, we can.
Yes, we can. Yes, we can.
So, are you
all
drop
the way
some
live.
gems
You
or
all the
what?
way live.
Man, all the way. Okay. So, thank you guys for having me. It's a pleasure to be here. You'll notice I'm in the luxury of my vehicle because I have in my office there's too many people and I just don't want to talk in front of everyone because don't want to give them too much game. But definitely want to just stress the importance of fixing your credit, whether you do it yourself or you hire somebody. It is so important. Like like everyone talks about, it is literally the starting point of a new beginning for yourself and for your family and for generations to come. And that is what I represent. That's what I
Before
help
you get
people
too
with.
deep into that, I want you to tell your journey. Give us a little
Man,
bit of background
whew,
of Nicole and how you know those different checkpoints you've been through in your journey through credit and how you arrived where you are.
absolutely. So for me, I always had good credit. I bought my first house really young. I always understood the value of credit. I financed everything I always drove whatever car I wanted. I always had everything that I wanted in life because of credit, right? And then in 2016, I lost my job of 10 years unexpectedly. Went to work one day, boom, we're shut down. I said, what?
Mm-hmm.
So literally the rug beneath my feet got swept underneath me and I lost everything. My credit, that was early 2016. By November of 2016, my credit score was a 484 just because of late payments, not being able to keep up with my living expenses. So, by 2017, I had to sell my house. I was homeless. I couldn't qualify for a pot to piss in, nor could I qualify for a window to throw it out of. Like, I literally had nothing. I was sleeping on family members' couches. My car got repossessed out in front of my family member's house. Like, it was bad. Like, I thought I was never going to be able to get anything. Like, I'm never going to be able to buy a house. Like, I thought I was doomed. And I hired a couple. I started with Lexington Law. Like, I hate to name drop, but I'm just going to put it out there. I started with Lexington
Like
Law,
most
like
people.
most of us do. You go online searching for help, and that's what comes up. And now, mind you, Lexington Law, they specialize in disputing negative items. So I got a few things removed, but my score wasn't going anywhere. So I fired them, hired somebody else. Still, same thing. Score wasn't going anywhere. So finally, I literally became obsessed with it and thought to myself, this is a huge problem. Like, I know there's a ton of me's out there, and where do we go to get help? We there's no class for this. There's no place for us to really go, and I didn't have anyone to turn to. So I just started diving in. YouTube University became my best friend, and I started helping everyone around me. And that's a little bit of where my journey began, is just realizing the gap between what the average credit repair company, what they offer, and what we actually need when it comes down to repairing our credit.
Yeah. Okay. So in regards to your journey and how you've used credit and been able to see the impact of having bad credit, the advantages of having good credit, I want to get into a topic of why credit repair is important and what is that process when it deals with repairing credit. A lot of people don't understand the who, the what, the when, the where, and the why. Let's dive into some of those.
Man, yes, absolutely. Number one, I bought a car. My interest rate was I think about 24, 28%. So think about it. You're buying a car that already loses value when you drive off the parking lot. And now I have to pay a 20, we'll say, call it a 28% interest rate. Now I got to pay a 28% interest rate on top of this. So I'm losing money, not to mention that my car insurance was over $200 a month. And mind you, I had a perfect driving record. My car insurance was so high because of my credit, because car insurance is affected by your risk factor. Your risk factor is your credit. You're high risk. If you have bad credit, you're high risk. You can't be trusted. Your trust factor is basically out the window, because our credit is our adult report card. And a lot of people don't realize that. Everybody's looking at it. There's soft pulls that companies can do. So we're not going to get a notification saying, hey, this company just pulled your credit, because they're looking at it as a soft pull from kind of like the back end, and being sneaky about it, saying, oh no, we're not going to be able to help this person out. But it's just so expensive. So I had a 2018 Challenger. Challenger, because I got a Charger now. I had a Challenger, and I was paying $650 a month for the car payment. $650 a month just for the car payment, and over $200 a month for the insurance. So that alone is damn near $1,000 for a car that is never going to return that value to me. That alone was like what people pay for rent.
That's a Mercedes-Benz
note.
Man, crazy, right?
So like I said, a lot of people don't know what a high interest rate is and what dictates that. And we try to educate our clients in regards to that. First and foremost ourselves, then our clients in regards to having good credit and the leverageability of having a good makeup and a good credit report. Obviously, having to pay high interest rate. If you're in the 20s, that's a perfect sign that you don't have good credit. Now, why answer me this? Let me ask you a question. What's the stigma behind, based on your experience, behind credit repair? Why do people think it's a scam or it can't be done?
Because a lot of people won't see results instantly. You're paying a company month after month. You might pay a company for 60, 90 days and not see your score go up. Yeah, that's very true, because you need positives and you need the negatives to go away. So you need positive counts to build credit, and you have to do it very strategically. And a lot of my clients that some clients will come to me and say, hey, I just need some accounts removed, right? Okay, no problem. I'll get those removed for you. I had a client message me today. She said, well, my TransUnion credit score didn't go up. You removed all of my collections for me, but my credit score has not increased. Why is that? I need to call TransUnion. I said, no, you need to have open, positive lines of credit. There are other data points that go into building a credit score. And, it's important for us to educate ourselves and our family members as well, but those data points are. And if you want, I can go into them. You want me to go into it for them? I'm going to take that as a yes.
Yeah.
So our data points are A, you got to make all your bills on time. You got to, any bill that reports to the credit bureaus, and I'm talking a lot of bills that don't report to credit bureaus, you have some leadway. So bills that don't report to credit bureaus might be utility bills. Yeah, you'll get sent to collections if you don't pay them, period. But you can have arrangements made for cell phone bills, utility bills, things of that nature. Bills that report directly to credit bureaus are your car payment, your house payment, your credit cards, store cards, any type of credit that has been extended to you. Those are reported on a monthly basis every time you make a payment. And it is so important. It doesn't matter if that payment is 50 cents or $50. It's the principle. And if you obligate yourself to paying something, your word has to be golden. These creditors don't want to chase you down for a payment, point blank, period. So you need to pay your bills on time. And you need to make sure that you have things set up on auto pay, even if it's just the minimum amount due, that's fine. But just make sure that you're making that monthly payment on time. Set reminders in your calendar. Get yourself set up for success, because that's going to kill you. I have literally seen one late payment drop a credit score over 50 points because someone made a mistake. Yes, there are ways that we can get those corrected, but if we can avoid it, let's do that. The second data point is your credit utilization. So a lot of people will get these credit cards, go out and run it up. Like, that's not what credit is for. Credit is for emergencies. And if you have $1,000 credit card and you have $900 that you owe on that credit card, you're using 90% of that credit utilization. That is way too high. If you Google what a good credit utilization is on the internet, it's going to tell you 30%. 30% is way too high. When we're building credit and we're establishing credit, you need to keep that between 2 and 6%. So for those that aren't good with math, let's just keep it under 10%. So 10% of $1,000, that's $100. So I always tell people, treat your credit cards as if it is your debit card. And then we can reap the benefits of the cashback rewards and all of those things. But that's a whole nother topic. But yes, your credit utilization, we got to keep that under 10%. So between on-time monthly payments and credit utilization, that's 65% of your credit score right there. Huge, right? So then we move on to the third data point, which is your history. Your history makes up for 15% of your credit score. And the average history that lenders want to see is at least 2 years. A good place to be would be about 5 years. And the next two data points are both account for 10%. So number one would be your new credit, and this would be considered credit inquiries, because every time you get apply for something, anytime you get an inquiry, you apply for something, you're going to get an inquiry. So that's going to cost you between 3 and 5 points. And it's also going to bring down your average age of your history. So you got to do that very strategically as well. The next data point is your mixture of accounts. Creditors want to see that you are able to properly manage a mixture of accounts. So when I say mixture, they want to see, okay, you got a few Visas, you got a few MasterCards, so major credit cards, you got a couple of those, you got a couple of store cards, and store cards are generally only for that particular store. So if you have Bath and Body Works credit card or a Macy's credit card, those are store cards. And then you have your installment loans. Installment loans can be something as simple as Self.Inc. or Credit Strong. Car payments, student loans, anything that remains the same payment every month until that balance is paid in full. So they want to see a mixture of accounts because they want to make sure that you're responsible enough to manage your credit as a good consumer. And that's where your data points are established right there. Just five topics.
Okay. So you just broke down a good mixture of a good file. Utilization, types of credit. Because a lot of people don't know the difference from like just a revolving credit card or a store card or what's that? An installment or a prepaid card or even a secure card.
Right.
Now with that mixture, if you were talking to someone that was looking to get a loan, whether it be an auto loan or a home loan, what's a good mixture of accounts to have on there? Let's just say for someone trying to purchase a home.
Okay. So for someone that's trying to purchase a home, everyone's goal is going to be different. So if you're trying to purchase a home, any balance owed, they're going to look at that like, okay, this is a liability, because they don't want to see any balances due. So I don't recommend the credit builder loans like Self.Inc. because those are going to show as if it's a personal loan, even though it is an installment loan, and those are good to help build credit. But if you want to buy a home loan, or I'm sorry, if you want to buy a home and get a home loan, you want to show that you have established credit lines. You can start with a secured card. I like building with banking institutions that are relationship banks. I like Navy Federal because I only recommend secured credit cards that graduate. Secured credit cards that graduate will refund your deposit back to you, but keep the line open. And that's what we want because we don't want to mess with First Progress or any of these whack ass secured cards where we're never going to get our deposit back unless we close the account. That's not going to do us any good. So we want to build relationships with people that are going to have a long-term relationship with us. Like Discover It. They have a great secured card and it gives you 1% cash back. And after 7 months, you can call them and say, hey, can I, graduate my card to unsecured? And if you've managed your card properly, you've paid all your bills on time, your utilization's always good, they probably will extend you credit. If not, they will review your account every month from that point on to see if you're qualified. Same thing with Navy Federal and their secured card. And like I said, you got to be very careful with these secured credit cards. I don't really like secured credit cards because the thing about it is, we need credit cards. But if you have a bunch of $200 secured credit cards and you're at the point where your credit is finally getting good and you want to go to a bank and apply for an unsecured card where, the bank is giving you a line of credit and they see that you have a bunch of $200 secured cards, what do you think they're going to give you?
Yeah, they're going to match it.
Yeah,
they're going to match it. Exactly. They might give you 500, but it's like at the end of the day, that's nothing. We're looking for them big balances. We want the big boy toys. We want 25K, 30K, 50K. We want to be able to leverage our credit, especially starting with personal, but the end goal is the business credit because the business credit's where it's at.
Yeah. Exactly. Now, can people repair their credit themselves?
Absolutely.
If they can, why do you think a lot of people don't?
Because they want to do it because they don't want to pay anybody else to do it. But at the end of the day, they don't have the time to do it. And they get discouraged because they're not doing it the right way. They're going online. They're saying the account isn't mine. They're not leveraging the law to their benefit. And the accounts are coming back verified because they're not disputing things properly. There's a way and a process for everything, right? There's a million ways to skin a cat, but the end result might end up being the same. Not skinning the cat per se, but you get what I'm saying. If we go across the pond, it doesn't matter how we get there as long as we get to the other side, right? So the bottom line is, you talked about opting out of these third-party agencies. That is so important. People don't realize these third-party data furnishers, they're the ones that are snitching on us. They're the ones that are giving our information to the credit bureaus and telling them, oh, this person did this person did that. But guess what? If you opt out, they can't do anything. They can't tell the credit bureaus. They can't verify anything on our behalf. So it's super important that we take the necessary steps before we even attempt to challenge our first account or send our first dispute letter in. And a lot of people don't realize the first step before you should even send a dispute letter in, get your personal information corrected. Make sure that you have one name, you have one address, you don't have nothing else. No employer, no nothing. Because as soon as you apply for a credit card, your employer is going to go right back on there because that personal info is getting to your credit report via information that you are using to apply for credit. So if you don't manage your credit or you don't really use your credit, you might have addresses on there from 10 years ago. That looks like you are not stable. Creditors want stability, and that is not stable. So we want to make sure that personal info is cleaned up, cleared up. You're opt out of all the third-party agencies,
Talk about that part. What is that? these third-party agencies that people never heard of. Talk about them real quick if you can.
Oh man. So there's hundreds of third-party data furniture. I call them wannabe credit bureaus, right? They're trying to be the next biggest thing, but they're never going to be. So there's companies like LexisNexis, SageStream, Innovis. If you guys want to DM me, I can send you a whole list of people that we opt out our customers with. We have about 18 in total, and these companies are the ones that store data on behalf of consumers and share it with credit bureaus and other folks. So anyone can go to them and ask them for information, like LexisNexis. A lot of these debt collectors, skip tracers, that's a major tool that they use because LexisNexis probably stores more information about us than we know about us.
I think that's what the repo man use.
Man, hell yeah. They got all of the info. So you got to opt out and make sure that you're not letting your information being shared with anybody. That is so important.
Okay. I got a question. Twyla Castillo asks, is it good to pay off your credit card once you use it, or should I just continue to make the minimum payment?
That's a good question. And I'm going to tell you what I do and what's helped me out. And I train my clients on this as well. I don't use my debit card. I use my credit card for everything. And I train all of my students to pay off their credit cards every Friday. So they're paying their credit cards every Friday, and they're also making sure that it has a 0 to 2% balance about 5 days prior to the statement date. So the statement date is the date that you want to be focused on. Yeah, the due date is important, and you want to have auto pay set up for the due date just in case anything happens. But the statement date, that's the end of your billing cycle. And usually creditors report to the credit bureaus about 2 to 3 days after your billing statement end date. So you want to make sure when those creditors report to the credit bureaus, they report that you basically have a zero balance due. Because think about it, I'm not trying to pay interest on none of my expenses because I just want the cash back rewards. So we can run it up all week. Use your credit cards for your everyday cash purchases, gas, food, groceries. Because guess what? A lot of these cards, they give cash back rewards. I have a credit card right now. I swear, no lie. It's got over $300 in cash back rewards from 1 month. And that's just me spending everyday things like gas, food, and groceries.
Stuff you were going to buy anyway.
Yeah.
I know there's even ways. Is it Plastique, or there's another one where you can use your credit card, like attach it to the Plastique account, and they allow you to have a list of vendors or payees that you can make payments to, like your mortgage or other institutions where you were going to pay that anyway, I hope, and get the points, get the 1%, 2%, 3% cash back. And, I utilize that and tell people use the credit card, pay for everything. Like you said, pay it every Friday or every 2 weeks, what works. But that also, would you agree, increases your credit limits over time because now they see a level of responsibility and usage.
Yep, sorry about that. Dropped y'all.
That's okay. And so yeah, definitely. I totally agree with that. So definitely, Twyla, use it, pay it off, use it for everything if you can, because that'll show the creditor that you have a responsible trend. And then when you go for a credit line increase, in 3 months or 6 months, they see that you're using it. Because at the end of the day, credit card companies make money off of interest and us carrying these balances month in, month out, month in, month out. But at the end of the day, if we're responsible, then we have opportunity for those credit line increases, right?
Absolutely. It's like, we have to walk a fine line with these credit card companies because if you don't use it, you lose it. So I know,
Yeah.
Capital One happens to be one of the most stingiest credit card companies on earth right now. They don't like to give credit line increases unless you're literally like maxing out your cards every month. And, I don't necessarily like to teach that habit until people are a little bit more advanced. And I know that they have that cash that is actually something that is in their budget that they're going to pay anyways. So, with other companies, you definitely want to use it so that way you could be applying for line increases every 3 to 6 months so you can continue to build and grow. And the more that they see activity on your account, the more that they want to give you money.
Yeah. I know. I'm gonna drop a gem. For those Navy Federal individuals, Navy Federal has this 91-3 rule. So every 91 days or 3 billing cycles, you can go for a credit line increase or a second credit card or third, depending on how many you have. So literally every 91 days or 3 billing cycles, you can go for a credit line increase. And most of the time, they won't do a hard pull if it's just a credit line increase. They're not super generous with their credit line increases. They average, I think, around $4,000 sometimes on the increases. But at the same time, when you go for a credit line increase, you can go for a second credit card or a third credit card and get to the point where you merge those groups of cards into one larger credit line. Chase is another one that does that also, allow you to merge 3 or 4 cards into one large credit line, close the other ones. Now you just got one credit card with them with a large amount. But yeah, credit line increases are the end game, one of the end games when carrying and having credit for leverage. This next question I want to ask: can you, as a credit repair company, remove late pays?
We can, and I'll be honest with you, late payments are one of the hardest things to get removed because they're easier when the accounts are closed and you're disputing the account. But when you have an open account and say, for example, it wasn't during COVID and you have some late payments. Like I had a client that had 8 late payments on his car payment and we had a really hard time getting them off. They told us no probably about 6 or 7 times until we finally were emailing like everyone in the company. We would go, me and my team would go online and find email addresses to the company and email CEOs. We would email department managers. We would email all these people who actually, could do something, because the people on the front line, I call them like their army staff. They don't want to let nobody through. They don't care. All they're going by is company policy, and they're going to tell you the same thing. Company policy says that we have to report accurate information. Okay, well, they don't tell you that you can forgive it. So we have to try to get through to someone who can understand our situation, because life happens, and
Especially
we
now.
just have to put it in writing and get it to the right people who are willing to read and listen to our story.
So without giving up too much sauce or logistics on your process, are you saying that's one of those methods that you reach into, that toolkit in regards when it's late or collections, trying to get to that hierarchy structure, possibly with that scenario of, I know the pandemic right now has been a way for people to, that has actually been impacted to use that as a leverage to get those lates or deal with collections and things of that nature because of loss of income, loss of job. You can't really say, okay, you didn't lose your job or you haven't been impacted like that when there's a pandemic going on. I have another question. CFPB. I know a lot of people talk about the Consumer Finance Protection Bureau and ways of using that as a dispute method. Do you guys use that at your office?
Absolutely. Now, keep in mind, the FCRA does say that you have to give the credit bureaus a reasonable amount of time to investigate the situation and give them a reasonable amount of time to be able to help you. Okay, great. But guess what? Reasonable isn't defined. So in my opinion, reasonable is 60 days. So if I don't get results from the credit bureaus within 60 days, we're going to the CFPB and filing a complaint against them. And I'll tell you, like, they respond pretty quickly. And if they don't, we just keep on filing complaints. The thing about credit repair, you have to be consistent. You can't think sending off one dispute letter is going to solve all your problems, because it's not. You have to be persistent and consistent.
And I think I know for me, with my clients or even self, it's tedious.
For me,
it's tedious.
And
yes.
Tedious.
There's a follow-up to the follow-up to the follow-up sometimes. And
Yep.
you don't document that process or have systems in place. Even just for yourself, when you're doing your credit repair on your own, you can dispute inaccuracies. You can send letters. Everyone's story is different. So that's why I think a lot of those companies, would you agree, don't really work, because they have just a basic, like, redundant template that they just keep sending in, and you don't get those results. So
yeah, it's not personable. They just think, oh, well, this person's just trying to get off easy. There's all these softwares that have these pre-populated letters that everybody is using, and they've seen these letters thousands of times. No, you have to pour out your heart in these letters. You got to let them know what's going on. It doesn't need to be pages long, a 10-page letter, but you do need to let them know. And if you can send some type of supporting documentation to support your claim, that makes it 10 times better. Because one of my clients, she worked for the police department. So we let them know, hey, she's an officer. She was working long hours. She, forgot to make a payment. They forgave her because we sent proof of her pay stub and the amount of hours that she was working. That was sufficient enough for them. So you really got to be creative in thinking, okay, well, what more can I provide these people to let them know that I'm serious and that I'm not just somebody that's trying to get off easy? Because you got millions of people that, want things done for them the easy way out, and sometimes it's just not that easy. So you definitely supporting documentation and anything that you can send that can kind of solidify what you're saying is definitely going to help.
So substantiating documentation is key.
Absolutely.
Okay. So we talked about why credit repair is important. And I appreciate you breaking that down. We talked about who needs credit repair. And some of the processes behind that. What I really wanted you to dive into, and you did, was talking about how to structure your report. Now, say I'm coming to you as a new client. Walk me through that that workflow. What does that look like? What's the first thing to do, and then kind of go into like the steps of what that looks like organically.
Sure. So with my clients, when they come to me, the first thing that we do is we do what's called a game plan call, and it is recorded on Zoom, and I send it to my clients afterwards so they can go back and watch it as many times as they need to, but it's recorded, so everything's right there. We talk about everything that's on your credit report, and we go through line by line so everyone understands how to read their credit report, what's on their credit report, and what needs to be added to their credit report. Not to mention what needs to be removed, of course, but they have a clear understanding because I use Smart Credit. Smart Credit allows us to see all three of the credit bureaus side by side. Now, I will say this, Smart Credit is a Vantage score, but at this point in the game, I'm not worried about what your credit score is because we already know it's not good. What we are worried about is how your credit is structured and what's being reported on there, because the score is going to come. That's a given. but it's not going to come until we get the right accounts on there being reported and we get some of those old accounts corrected or removed. So we go through everything of what needs to happen, and we give recommendation on what accounts should be added and the benefits to those accounts based on what your goals are. Like I said, if your goals are to buy a house, we don't want to add a bunch of debt, aka credit builder loans, because those are debts. Those come up on your report as personal loans that you're paying back. So when a lender looks at that, they're like, hold on, you took out a personal loan? You're like, oh no, that's just Self-Thought Inc. Oh no, that's a personal
They don't know
loan
what that
to the
is.
lenders. You know, that's a debt obligation. So we want to make sure that your report is structured. And honestly, lenders, they want to see about 10 open active accounts on your credit. And some people might not have quite that, and that's okay. But, you know, we try to get as close to 10 as possible.
Okay. Now, obviously with that blueprint and that one-on-one customer interaction, what does that, obviously it's different. I know everyone asks this question. How long is it going to take? And I know you can't really say, but when can, I like to tell people you will start to see results in about how long?
Well, yeah, I mean, everyone is different. And I've had people see results in the first 30 days. And I just had a client last week tell me he hadn't seen anything for, this has been like 60, 70 days now. And then all of a sudden his score went up. One went up 50 points, one went up 80 points. So it really depends on the person. Like, we do all we can on our end. We give you all of the different types of tools that you could potentially use to try to increase your credit score, and we help you and you know, coach you along that way. But it really does depend. There are also clients out there that have friends or family members that are able to add them as authorized users to their credit cards that are in good standing, and those help. I mean, if you can get someone to add you as an authorized user who you know and trust, that's going to give you an increase within 30 days for sure. So that's definitely, you know, a quick hack to get your credit boosted. But, you know, the end goal is to have your primary account set up. And so I like to tell people, like, you know, I like to give people the 6-month time frame, because right now with the pandemic, credit bureaus are taking at least 60 days to respond. Right now they say, you know, they have 30 days, but really it's like 45 days, and then they can extend it another 15 days, which gives them 60 days. Plus, you know, we're waiting for other things to hit. So it's just kind of like a waiting game at this point. I can't wait till things get back to normal, to where we have the normal 30 days per the FCRA. But, you know, until then, we just have to be patient. And, you know, sometimes things take more than one letter. So, great, it's easy when it's knocked off the first letter, but, you know, it just depends. And I like to tell people anywhere from 6 months to a year, because mind you, we're building. So when right now we're all going off of the FICO 8 model, where the last 2 years are, you know, key. Pretty soon FICO 10 is going to be dropping. Man, people are going to be in for a rude awakening, because the last 48 months are really going to kick you in the ass.
So with FICO 10, what's the main thing people need to take away and understand?
FICO 10 is going to be looking at the last 48 months. So they're going to be looking, instead of the last 2 years being the most relevant, the last 4 years are going to be important. So if you haven't already started fixing your credit, you need to do so now, because if you're in a good position, and a good position would be like anybody in like 660 to 680 and above, y'all are okay. But anybody below that, you got to get your stuff together, because your score is going to decrease with FICO 10. Anybody who is already on the up and up, it's going to help you, because they're looking at the past 48 months, and we know that we're already working on our credit and we're clear. So it's definitely something to be mindful of. No, it's not going to happen tomorrow, but it is going to happen within the next year or two. People are going to be using the new FICO 10 model.
Yeah. I noticed. You know, you're in the same vein with credit and stuff. A lot of those My Jeweler accounts, and a few other ones. I can't think of the names. They started not
Coast
reporting cut and
Direct
chase,
and AG Jewelers.
AG Jewelers. Yeah. So, would you recommend? I'm thinking of starting to more or less, instruct people that need those filler accounts or need a little assistance. Because eventually, authorized users are going to be obsolete. I mean, we even have banks that won't report to all three bureaus.
Right.
They might report to one or two. Focusing on, a game plan for individuals to essentially just have to open up their own primary accounts and just build, that there's no longer that maybe 30 to 60 day window of you having good credit. Maybe, like you said, it's a longer 6-month process that they need to start or earlier on in the game to position themselves. And especially for business credit. I know you specialize in personal credit, and we deal with business credit in regards to building your business out and leveraging your personal credit with your business. Now, if a client needs to get in contact with you, what's the best route? And if you can touch on like price points so people have an idea, or is that based off the console?
Yeah, no, I charge the same price for everybody, because no matter how big or small the job is, my job is still the same. I still got to give you the information. We still got to get everything. It's still the same process. So we charge our clients $199 a month. Plus, they need to have credit monitoring. We use Smart Credit just because I like their system, and it has all three of the bureaus right next to each other, so we can easily spot out the errors and inconsistencies on your credit report. But I would prefer people to not be on the whole monthly deal, because it is a process. So I would rather people sign up to just get the job done. And this covers for 12 months. It's $14.97 for a 12-month period. And even if it does take a little bit longer than 12 months, that's fine. But I haven't really had anybody that has gone past 12 months. And that includes just getting the job done. Anything that you need to get, because every report is different, right? I've never seen one that is the same. So no matter how big or how small it is, we want to get you in the right position, get you structured, get the negatives off, add the positives, start building relationships with financial institutions. And like you said, start building. And, you did touch on a good point with My Jewelers Club, and I have spoken with them. And right now they are having an issue not reporting with TransUnion. They are working on that. I don't know what has transpired between them, but they have assured me to not worry, that they are working on it. So they still are reporting to Experian and to Equifax, but for whatever reason, they're having issues with TransUnion right now.
Yeah. Okay. Yeah, a few people in that space are having an issue with TransUnion. But so if someone needs to get in contact with you, get in contact for a free consult. Is it through a website or through your IG?
They can call me, they can text me. You can call or text our office line. It's 510-892-0188. You can find us on Instagram _Bay Area Credit Repair. My name's Nicole Scott. I'm the founder. We are really passionate about what we do, just because, we've helped so many people. We're literally like changing people's lives, and I like doing it, and it makes me feel good seeing the results.
Absolutely. I mean, at the end of the day, it's about the results. It's about the impact that you can have based off of your intent. Once you have those things, the income will follow, especially if you enjoy it and like you said, you're being impactful and you're changing lives. And that area that, like I said, it's not something we talk about a lot of times in our community, in our households. I think our dinner tables and our meetups and conversations need to be more geared around financial literacy.
Absolutely.
Being held accountable, being responsible, and learning what some of the opportunities are out there to invest. That's why we created Access Capital to be a staple to the community and be a aggregate for information to bring people like yourselves and other industry experts that can be reached and teach people these tools and resources that they don't know where to go, or they're fumbling around the internet and paying overpriced and things of that nature. Let me ask you a question for the audience. So I know you have the monthly payment plan and you have the get it done plan. What if someone comes to you and they don't quite have or the full amount or that full monthly payment? I mean, are there any other options that you guys
Yeah, I
work
mean,
with?
I work with so many people. Like, I'll tell you something. I usually sponsor like 5 individuals every month because we are a nonprofit. So at the end of the day, our whole goal is to help people, right? And I understand sometimes we don't have that type of money hanging around. So I definitely want to try to work with you guys. And if you're serious and you're ready to put the work in, I'm here to help you. And that's what I want to make clear to you guys. Don't make it because I can't afford it, I'm not going to do it. No, let's take some action steps. Let's have a consult. Let's try to use your tax return money to invest in yourself and get you in a better financial position. Absolutely. And we do with our full service payments, I generally charge 500 down and then we do 3 payments. So that way it breaks it up for people. Some people want to get it paid and done with. That's fine. But some people are like, look, can I pay you 500 and then we do another payment every 30 days just to kind of help people up, because some of my clients are single parents. I get it. I'm a parent myself. I have a 1.5-year-old daughter. Like, man, it's rough. We live in California, one of the most expensive places to live in the United States. So I get it. At the end of the day, I'm here to help you guys.
Yeah, you're in the Bay Area. So Bay Area, right? That's why it's Bay Area Credit.
Yep.
Okay. All right. Well, I think we dove into some pretty deep topics. A number of things I wanted people to walk away with was the stigma, erasing that stigma of credit repair. A lot of times putting a face behind that company that is gathering your information that you're corresponding with for your credit, and not just some conglomerate that you don't really get to have a personal relationship with. You're speaking to a virtual assistant or, some auto attendant. But being able to tell your own story, being able to make it personable and relate to people that you've been there, you've walked that path before, and there is light at the end of the tunnel. So if anyone is struggling with credit, don't understand credit, just want to, consult as far as what direction they need to go in, how to improve their credit, looking to buy a house, a car, whatever, trying to get in position at the end of the day, reach out to Bay Area Credit or reach out to us and we'll point you in that direction in regards to putting you on that path to success. I just want to thank you for your time. It was kind of a last minute, but you definitely wanted to be part of this, so I appreciate that.
Yeah,
dropping those jewels, giving that information, and at the end of the day, just wanting to reach out and be impactful for the community in this space. So I appreciate you. Anytime you need us to come on or need any assistance in the funding space, please don't hesitate to reach out. You got anything else, Jay?
No, man. Go that like it was Benz, man. I'm light work today.
I'm light work today.
So once again, just give your information out.
Give your information
contact
out,
number, and I see your IGs out there. But go ahead, just repeat it. Let people know so they can reach out to you.
Well, thank you guys so much for having me. I appreciate it. I had fun. And, you know, I'm all about making things work, finding solutions, not excuses. So get at me ASAP so we can try to get something in the works, y'all.
All right. Appreciate it. Once again, you guys, everybody. Go with Nicole Bay Area Credit Repair. Reach out, DM her. Let her know. Consult. And I'm pretty sure she will definitely take care of you. All right. So we appreciate you guys. Appreciate you coming on.
Thank you guys so much. Talk to you next time.
All right.
Bye-bye.
All right.
Well, all right. Another
episode of just straight game.
I didn't have to do much today, man. I kind of like
do much today, man. I kind of like backseat driving.
So yeah, it was pretty light work. It was
pretty light work.
I don't mind. It's cool. I don't mind.
Yeah,
credit repair.
Credit repair
is essential thing. You want to have right now. There's a number of reasons why you might not have great credit. Reach out to us. Let us also consult and then put you on that right path, point you in that right direction, whether it be with us or one of our affiliate partners that can specialize in that.
No credit is too bad.
Credit can always be fixed.
Credit can always be
fixed.
No credit is too bad. CPN numbers.
Got some jewel in itself. That probably went over your head.
They gonna
hear it run. Went over your head.
Yeah, somebody say you need a CPN number. Stay away. Stay away. Before we end, just want to remind everybody to if you haven't or you don't understand what the PPP program is, if you are a gig worker, if you are a single member LLC, sole prop, you have a DBA, you walk dogs, you a stripper. I don't think we do strippers, huh? I don't think so. Ain't gonna 1099. If you're a 1099, you got a legitimate job. That's being recognized. Please reach out to us. Our link is in the bio. Whether it's your first, second, or your second. The deadline is March 31st. Tentatively, that can, and it probably will. But you don't want to wait. You don't want to be last in line because it is bottleneck. Applications are taking about 10 days from start to finish. Reach out to us if you don't know exactly what documentation you need. We have our own portal that we can help submit through and walk you through that process. It would be a shame that you don't take advantage of this opportunity that can change the trajectory of your business. Or save it. Don't just wait for $1,400 stimulus money that you might not even get. And if you do get it, put it to use. There's opportunities out there. One being getting your credit fixed with that money. Just change the narrative. Just change the dynamics of your family and what's going on financially. One of them things is your credit. What else?
That's it, man.
That's it.
The link is at the bottom. If you already got all your documents, you can go down there and do it yourself.
Hit the social
access to capital.com. Right there they say PPP loan submissions. And if you're confusing, like you said, you can consult, schedule a 30-minute consultant. We'll walk you through it and get you going. Other than that, same bat time, same bat channel next week, Monday 3 p.m. While we this week, we try to cook up some more jewels for you, make it shine like a diamond.
There's plenty.
This is just the beginning. It's gonna get better and better. We're gonna give you more jewels. We're gonna tell some of our old. We'll give up some of our secrets. But we definitely bring it to the front for it. We bring it to the front. We've been behind the scenes for years and years and years. It's quietly moving. Coming out to the forefront. Take up some trees.
Yeah, we'll have industry experts in regards to banking, from U.S. Bank. We'll have taxes. We all love taxes, right? So we'll have a CPA on to break that down to make us feel a little bit more warmer, fuzzier about that whole sector of our lives, especially for us entrepreneurs, to get us efficiently running as a business, not just an expensive hobby.
Wednesday, we doing
our first House
Wednesday with the syndicate.
Y'all gonna get to see Meet the Syndicate.
Y'all gonna get to see me.
Yeah, with our other partners.
So get to meet the syndicate.
Stay close.
Stay close. Follow us.
Follow all platforms.
Click on everything.
Like, subscribe. Click on everything that matters.
Appreciate everybody for tuning in.
Spending an hour.
It was beneficial, impactful.
And most important, you implement it. Man.